Good afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Corum here, and I am joined by Ed Carson. On today's show, our last episode of 2020, if you can believe it, we're going to go a little bit more in depth, talk about the NASDAQ on the daily time frame, also look at a weekly time frame, get a little bit more into the technicals, and take a step back, talk about this year, what went down, what we expect for next year, and we're going to take a look at a couple of stocks that are looking interesting. But first, Ed, let's talk about the action this week and today. It was still a relatively quiet holiday week this week. We had the NASDAQ gaining about 0.1% to finish off things this week. The Dow up about 0.7%, same for the S&P 500. And we have the regression channel lines drawn here, and it looks like we're hugging that regression line, Ed.
Yeah, I mean, that has been a sort of steady area right now for the past few weeks after being sort of in the lower half. We're right there in that area. The action last few weeks, especially, and I mean, all the indexes, but it's sort of letting these major indexes catch up a little bit because we were starting to get close to extended. I think we'd say we're less so now. I mean, we're still moving forward. I mean, I think all the major indexes had, weekly gains, not tremendous, but just we're sort of moving along. Nice action in that regard. One thing that I think was different is that growth names, some growth names came under pressure. I mean, some of the software, some of the speculative IPOs that were, that nearly doubled, say in November, some of those came under pressure this week. But still, I think the market uptrend is looking pretty healthy heading into 2021.
Yeah, it is. And let's also flip on over to a weekly chart and see what that tells us there, Ed. I mean, we've just had pretty steady gains here for the last number of weeks. You can see that pretty dramatic action that happened over the fall a little bit, but that's well within the rear view mirror now. And it's been relatively smooth sailing, I would say, even though underneath the surface, as you mentioned, some growth stocks maybe taking a little bit of a breather or pulling back a bit. But what does this tell us?
Well, first, I just to say on the growth stocks, in addition to that, other things like there were some chip names that broke out that weren't as speculative. There were some real economy names that broke out, and we'll talk about one of them a little bit later. So I just it's not that there wasn't good leadership. There was. It's really surprising. Once again, Scott St. Clair, who is a Market Smith products coach, and he was saying on IBD Live, if you had told him all the headlines that were going to happen in 2020, he would have lost money because he would have thought we're doomed. We're not going to rally. There's all this recession, all this, the shutdowns. It was really incredible. And not just to rally, but to have this run. And then, we have a chop, but then we're running at this sort of fairly steep pace once again. It's pretty amazing. All the action that we've had. I mean, you couldn't predict it. This is why we say you don't want to try to predict where the market is because either you'll be surprised on the upside or the downside.
Exactly. You make such a good point there, Ed, because there were a lot of very scary headlines. And that's sort of the beauty of our market-based rules. We're looking at history, we're going back. What are the signals to get you back in the market? And I think we did that pretty well. Getting back in early April and really just cutting out the noise. And the market sort of climbed that wall of worry for months. And it turned out to be a very profitable period of time, especially for growth CAN-SLIM investors. And, I can remember a business network having a show called, I think, Markets in Turmoil until the NASDAQ was almost at new highs. So if you're listening to the noise out there, it was pretty scary, but it would have prevented you from taking advantage of a really hot rally.
And you wanted to be in the right stocks. I mean, obviously just the NASDAQ, and you could have done a lot better than the NASDAQ. The NASDAQ rose, this was early, about a couple hours ago, I was doing the math. NASDAQ was up 43% for the year. And, meanwhile, the Dow was up about 6 or 7%. So you definitely wanted to be in the right stocks. And that's obviously what we're trying to do here is, play the rallies. This is a lot more fun to be in than this. and try to be in the right stocks. And it's amazing. You just do a couple of things, and all of a sudden, the chances of success and the chances of big success go up a lot.
That's right. There were a number of really big winners this year. It was a lot of fun to see all of that happen. Of course, there were some bumps along the way, but if you take a step back, we've been in this channel now for quite a while. So, what could investors expect? With you said the NASDAQ having such a huge year, what could we expect for 2021?
Well, historically, after such a good year, and we also had a pretty good year overall in 2019,
Mm-hmm.
uh, historically would say it's less likely to have a really big year. It would be unlikely to have this again. Of course, this uh, you don't want to make judgments. If the market does it, you got to be ready. But you can't expect the market to have this kind of gain once again. There might be plenty of good rallies. I mean, you could have the market that goes up 6%, but there's a number of rallies in there that are 15%, 20%, and you can really ride those. And we'll see. I think you also have to just wonder what the leaders are going to be. I mean, you don't want to necessarily assume that the leaders of this rally will be the leaders of 2021, but you also don't want to assume that the leaders of this year will not be. I mean, you can't just say, well, they've got to take a break. Well, some of them won't. Some of the leaders will continue, and some of them won't, and new ones will pop up.
Yeah, that's such an interesting point. I remember rewinding back a couple of years. Nvidia had a huge year, and oh well, it's already gone up so much. How can it continue? And then it had another huge year or two probably after that. So also very good points to make there, Ed. Let's also talk a little bit about the rotation that we might see. So kind of along those lines, because the economy, as we know, went under such a big transformation this year. And there's an expected recovery somewhat that we could see next year. How might that shape what we could see with some of the leadership?
Well, I mean, we're already starting to see some of the, and some of them did well actually in late night this year, but see
Hmm.
some of the financials because interest rates are rising and the economy is picking up. Miners are now, if you look at some of the mining groups, they are way up and they're already in the top, 5, 10, 15 groups. So they're already doing well. Some medicals might come back, some medical products and services that were sort of kept down during the pandemic. You just don't know what's going to come out, and there definitely seems to be some of that already happening. Some of the coronavirus plays may not do as well, the testing firms and other such. Cloud software, that's been running into a bit of trouble, but is that just a temporary thing? I don't know. I mean, we'll have to see. The thing is, I'm certainly not going to put anything in ink. This is not like, I'm not going to be doing the New York Times crossword puzzle in ink, and certainly not going to do this. I don't even want to do it in pencil. I just think that people should be ready for a rotation in the market. I
Hmm.
mean, if you're ready for that and you say, this is what's working, this is what's going to go, then you're going to be okay. If you don't have those preconceptions of, no, I'm only going to be in IPOs, no, I'm only going to be in chip stocks, or I'm only going to be in this, that hurts you because those sectors will be in and out of favor at various times.
Yeah, I totally agree. And I think for investors who have been along for the ride of the IBD team this year, we learned a lot in terms of making sure you're being flexible and not just planting the flag in the ground, as we always like to say, because this year did throw a lot of different things our way. So, being able to learn from that and be nimble and focus on the leadership, I think, was something that this year really helped teach us. And I think it's something that's great to carry into next year. Ed, what would you say is the biggest lesson learned from the market this year?
Boy, the biggest lesson, I mean, I think it's just like the biggest lesson is listen to the market. I mean, it's just that uh, we were all doubting the follow through day back in early April, but the rule is you try to take part in that rally. And it's like, if it fails, well, you get out with a little loss. But if it works, you really want to get in. And
Hmm.
it did show is like the market knows the market's going to do what the market's going to do. I think that's the biggest lesson I took away. It really did that well. I also would like to encourage everybody to read. We have a financial action plan. Our whole issue for the IBD Weekly is dedicated to talking about 2021, talking about your investments, including for mutual funds, ETFs, retirement. And Juan Arancibia, our markets editor, has a really good A1 cover story talking about the 2021 outlook, but obviously with the same kind of understanding that it's hard to predict and just sort of the kind of things to be looking for and preparing for.
Yeah, lots of really great data points and advice in that story and the whole special report itself. So make sure you check that out. You can view all of the articles on investors.com as well as in our IB Weekly print edition. Now, let's we haven't looked at the S&P yet. Maybe let's just take a quick look at the
That
S&P,
quick look.
Ed. Yeah, and then we'll go on over to our 3 stocks that we want to analyze. So here we go. Here's the S&P. So a relatively similar picture over the last couple of weeks, I'd say. Some nice support, still holding above that 10-day line. It's been a pretty nice steady uptrend, but what a year it's been. Just looking at it in a little bit of a different view on this S&P 500 chart. What are your thoughts when you take a look at this?
It's pretty much the same thing. Obviously, it just took more time to come back. I mean, the Nasdaq came back pretty quickly. It was pretty impressive how quickly it got to new highs, and the S&P, even back here was, it wasn't, we got back below. It wasn't until the Nasdaq, the November fall through that we seemingly have once again got to back over these old highs. So a solid year for the S&P given the huge losses here, but not as powerful as the Nasdaq. So, but
Yeah, and I was just going to say quickly, some might say the fact that we are just now in these new highs and not haven't run up a whole bunch since being in new highs might indicate potentially that we still have some room to go, but we'll have to see. We're going to remain flexible. Now let's take a look at some of those individual names, starting off with Jefferies Financial, as you mentioned, Ed. That financial name looking good. Ticker is JEF. Tacked on a pretty nice gain today, breaking out of a nice, I would say, pretty tight base here.
Yeah, there was actually a 3 weeks tight within there. It was really tight action. Nice support of the 21-day line. We haven't been looking at this too much. It's like sometimes it's like, oh, that's right, have to be scanning through. But this has really good numbers, 98 composite rating. I'm not sure. Like obviously it had a tough time here, but really rebounded in the next quarter. Really strong action. This investment banking, capital markets. Well, obviously Wall Street had a good year. Jefferies is doing well. It's not alone. T. Rowe Price is also in a buy range, which is also in the group, sort of a niche investment banking firm. So, just a lot of, positive action here, that isn't in that tech field.
Yeah, that is an interesting thing to point out there with Jefferies still in that buy zone. And now let's take a look at BYD, ticker BYDDF. Gained about 3% today in the holiday session, had a gap up in the stock not all too long ago. And I think another lesson learned this year is that, big gains can come from some surprising places. And I would say that these China electric vehicle stocks would be in that category.
I would say so. I mean, this one's a little more established. It actually, has a history. It's a pretty good size. Some of these other ones have only lost money, and and at the beginning of the year had hardly any sales. So you wouldn't have thought. Some of them were like, boy, can they survive the year? I mean, it was really more like that. BYD is a little different. It gaps up a lot. It trades over the counter in the U.S. So, and a lot of the trading is at Hong Kong. So you see all these little gap ups what happened in Hong Kong. So that's going to be a factor, but its volume is a lot better than this, and it is effectively, there is a lot of liquidity somewhere, just around the world. This one is profitable, growing fast. It sort of cleared this little handle in a consolidation that's too short. It looks better than a lot of the other rivals, which are a little more volatile. There's a lot of news coming out though in the coming days. So this is almost like an earnings report. In the next few days, maybe it could be as soon as Friday, but certainly by the middle of next week, we're likely to see December sales from BYD, NIO, XPeng, and Li Auto. And we may certainly by next Thursday, and it could be a lot earlier, we should get Tesla fourth quarter delivery and production figures. So all of those could move those stocks quite a bit.
Yeah, yet another potential catalyst there for this group, Ed. And this one, you mentioned it's more established and the numbers, and it has the backing of Warren Buffett too, right?
Backing of Warren Buffett, and I mentioned T. Rowe Price, and that was something else like T. Rowe, no, Fidelity Contrafund, which is another one of the funds we really like. They own a little stake in that, so that's one that we always like to see in as investors. So some institutional backing for sure.
Yeah, I'm glad you pointed out that institutional sponsorship. Let's turn our attention now to Pinterest. Ticker there is PINS. And this is one of those internet stocks that had a really big year this year. The last two earnings reports saw really big gap ups for the stock. And now, Ed, it is pulling back to its 10-week line, about the closest the stock has been to this level in months. I mean, since the summer, really.
Since the summer, and since then it's had a breakout. So this is really sort of the first pullback to the 10-week line since this breakout in here. This is an important area. Obviously, if it sells off here, it could be sort of a strong sell signal. So it could be a very negative beginning, to there, but this is also where it might find support at this 10-week line. So if it can rebound from here, this would be an area where investors could start or add some shares. So it's definitely because it hasn't offered many opportunities in a while. So that would be something to definitely watch for to see if it can get a bullish rebound and provide a buying opportunity in the new year.
Yeah, a very key test there. I mean, this stock has a number of good ratings from IBD, a couple of spotty ones too, though. The profitability, it's just kind of turning profitable, at least, steadily profitable in the anticipation for next year. And the anticipation for next year had a recent quarter of really strong top line growth. But overall, when you look at that composite rating at 91, that shows you that there are some pretty favorable factors underneath the surface, and the technical action has been pretty unrivaled, at least among the internet content peers. So we're going to keep an eye on Pinterest as it's at this pivotal moment. And thank you, Ed, for all of the analysis, not only today, but all year long. And we really appreciate everyone out there for joining along the ride. It's been quite a year, Ed.
It's been amazing. I can't believe it's almost done. It's also so weird how great the market has been, and just how strange and difficult the year has been outside. But it's been great to be working with you, even if you are a little bit further away than it was at the beginning of last year.
What do you mean? I'm right next to you. I'm right next to you on the screen. But yeah, it's been a great year. I think one for the books. But if there's any silver lining that you could see, I think you look a bunch of different places and you can see those silver linings, and the IBD community that we've all shared together, and the profits and the market rallies that we've been able to participate in have been really great. And we wish everyone a very profitable 2021. We'll see you in the new year. Thanks for watching.